After trudging ever so slowly along the path to recovery, Atlanta had some big momentum in second quarter 2011. And it certainly helps that new apartment supply levels are at their lowest levels in more than 15 years. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Hot Atlanta update. Let's start with a supply story. It's no secret that Atlanta is an overbuilt market, just way too much total apartment supply and single-family housing supply as well. Let's take a look at annual new completions in the apartment sector for Atlanta, and you'll see that new apartment construction has really slowed down to the lowest levels dating all the way back to 1994. Only 3,494 units built in the year ending June 2011. By comparison, Atlanta built more than 10,000 units annually on average between 1997 and 2010. And prior to a couple quarters ago, Atlanta hadn't even dropped below 6,000 units annually at any point since 1995. So this was a really big historic drop-off in new supply. And 2Q actually brought a double dose of good news for Atlanta's apartment operators and owners. Not only are there fewer competitors on the market competing for renters, but at the same time, Atlanta benefited from a strong surge in demand for apartments in second quarter 2011. In fact, Atlanta ranked 5th nationally with 5,110 units absorbed in 2Q 2011, and that was the metro's second best performance since 2005. And it certainly came at a good time. Atlanta recorded some really strong demand the first half of 2010, but had some backtracking since then in the following 9 months. It just wasn't able to sustain any momentum, in large part because the metro was still shedding jobs. In fact, Atlanta ranked as the worst in the country with 30,000 jobs lost in the past year. And so it's probably no surprise that overall occupancy in Atlanta remains pretty weak. In fact, the rate as of June came in at 90.4%. That is among the worst in the country. But hey, we told you that 2Q brought some good news, so let's focus on that. And in second quarter, occupancy jumped 1 percentage point, and that made up for some backtracking in the previous 3 quarters. And here's some more good news. 2 of the key upper-tier submarkets in Atlanta, Buckhead and the in-town-midtown area, now have occupancy rates at or above 94% after some strong progress in the past year. Of course, we got to be a little bit of a downer and point out that Atlanta is one of the few spots in the country where there's not even one submarket that is at the essentially full mark of 95%, but it's certainly nice to see these couple spots get above 94. Shifting gears again, more good news. Every submarket in Atlanta recorded rent growth in the year ending June 2011, but you're probably detecting a theme here. There's a lot of good news, however, good news, but, and the however here is that overall rent growth remains very mild. In fact, on a quarterly basis, same-store rents climbed to just 1% in second quarter, so not bad, but annually rent growth measured just 2.4%. That is well below the U.S. average of 3.8%. And really everywhere we look across the metro by product age category and by submarket, just not a lot of big rent growth numbers, pretty mild across the board. And so there's just a lot of ground to make up in Atlanta to get back to pre-recession levels. In fact, when we compare today to the year-end 2007 numbers, total apartment revenues in Atlanta are still down 9%. And revenues, of course, are the combination of same-store rents change and occupancy change. And going forward, it's just going to be a tough road for Atlanta to continue to record much progress. It'll certainly help that new apartment supply levels are going to remain low, but there is just so much vacant apartment supply and vacant single-family homes on the market, and especially in the suburban areas, vacant single-family homes could end up back in the rental pool, and that could weaken demand and rent growth in the suburban markets. But if there's one bright spot, it's the urban Atlanta submarkets, in-town, midtown, and Buckhead in particular. We could begin to see some solid rent growth in those areas. And that wraps us up for Apartment Market Dynamics. Until next time, for MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with MPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.